The Crypto Markets Update is presented by Grayscale, the world's largest digital currency asset manager.
Welcome back. So FTX US made a bid for the US Bitcoin futures market yesterday when it announced it was buying LedgerX. Is this how FTX breaks into the US derivatives market? Joining us now to discuss this and more is LedgerX CEO Zach Dexter. Zach, how you doing?
Hey, doing great. Thanks for having me on.
Congratulations on the acquisition. First of all, crypto derivatives, it's been a tough nut to crack in the US market, given its more restrictive regulatory stance for retail traders. So I guess my main question is, how does being under the FTX US umbrella, change that equation, if at all?
Yeah, I actually think there's a really consistent, clear framework for offering crypto derivatives or any other kind of commodity derivatives in the US. And the Commodity Futures Trading Commission regulates those derivatives. So there's a clear set of rules under Part 17 of the Code of Federal Regulations. There's a clear set of rules in the Commodity Exchange Act. And I mean, frankly, there's a fairly easy, lengthy, but straightforward set of forms you can use to propose new products and propose that you want to do something innovative in the commodity derivative space. And Bitcoin and ETH are commodities. So I think this is a very logical move. It's a logical next step. It's part of what I like to call the regulatory flippening, where a lot of these players who may have started overseas are starting to move into these highly regulated jurisdictions because that's where they think the long-term value capture really is.
That's a really interesting point about the U.S. because the U.S. is kind of known as being actually a very difficult regulatory environment. Are there any specific difficulties or challenges that are unique to the United States?
Honestly, I totally disagree with that. I think the U.S. has been fairly straightforward, especially on the commodity derivative side. I think the security side, there's still some questions about how legislation there and how policy is going to evolve, and I understand that. But from a crypto derivatives perspective, when we're talking about the top 2 or 3 traded products overseas, the options, the futures, even stuff further out on the risk curve, I think that the framework is clear. It's there. It's just the industry hasn't really stepped up until today to jump into that game. And I think it's a good thing for crypto overall.
So, Zach, I think there was some speculation yesterday that this was, FTX buying some of the licenses that LedgerX has accumulated over the years. Is this sort of like the license equivalent of a startup acqui-hire? What's your view on that?
Definitely not just about the licenses. So one thing that people, I think, don't know about LedgerX, we actually have 3 different licenses, and we're doing stuff with all of those licenses. We have the exchange license called the DCM that allows us to retail and institutional, the CEF, which allows us to institutional, and the clearinghouse, which is really, really tough to get. The standards are really strict. The process is arduous, but it's all very much worth it because if you get that license, you can hold customer funds to back derivatives transactions. So we actually have an operational framework there. We're clearing for our exchange. We're actually serving as the clearinghouse for a few other exchanges, some of which we haven't even announced yet. So in many ways, we've kind of been building this, stealth business behind the scenes that I think is much larger than what's just on the website. And all of that is part of what's getting, rolled into FTX US as part of the acquisition here. So I think it's about creating, a much bigger entity than what exists today at LedgerX and approaching the same problems, same products with much more, financial and operational firepower.
So Zach, FTX itself is involved heavily in the stablecoin market. Will LedgerX be able to use? Will customers be able to use stablecoins in the future to settle their options and futures, or is that not permitted in your licenses?
Yeah, it's an area we're actively exploring. So I would say that at the clearinghouse level, which is really where, to get to your question, can you accept stablecoins to collateralize derivatives transactions? And I think the question is not, can you do it? The question is, can you do it without a large haircut to the value of the stablecoin? Can you do it in an economical way? And I believe that's possible. Like it should be possible to set up a credit facility to accept stablecoin deposits and then collateralize trades with the underlying dollars. Then maybe down the road, with stablecoins themselves. But that's all subject to regulatory approval.
Why would that cause a haircut to the collateral to the stablecoin in clearing?
Well, I'm actually not sure it would. I just think it's something where, again, the industry has not proposed this to the regulators, so it's not a regulatory block. The regulators are actually open to doing anything. I think that's reasonable that could assist traders and more easily conducting their derivatives transactions, right? So it's up to the industry to say, okay, well, we think that we should accept USDC or another stablecoin, and here's what we think the haircut should be, if any. And until a proposal is made, it's really on the industry to start that train rolling down the tracks.
So how are your options customers positioned? Are they bullish, bearish right now?
Well, yeah, so the most popular trade on our platform is selling call options to capture volatility. People are basically selling vol. I think that's always been the case. We have a lot of long Bitcoin holders. I think in the future, the products will probably evolve and maybe go to different settlement mechanisms that are maybe a little bit more efficient. But certainly for the last 3 or 4 years, it's been selling volatility.
So, Solana obviously doing pretty well lately. Now that you're in the FTX family, are you a Solana fan? We're going to see any Sol products coming out of LedgerX anytime soon? And beyond that, just curious for your broader take on the market.
Yeah, sure. So I'm personally, without speaking for the regulated products, which are all subject to regulatory approval, I'm personally a huge Solana fan. I'm staking, been staking for a long time. I think proof of history is super interesting. So it's definitely something to watch out for. As to whether it falls under one regime versus the other, I think those are complicated legal questions. And frankly, we've been so busy, we have to sit down and do the analysis and then shoot that over to the regulators and kind of get their thoughts on it. So I think that's the next step for any new products.
Zach, Binance had some issues with its derivative products related to equities, basically tokenizing equities. With FTX now coming into the market in the US, even more so with their acquisition of you guys, do you see potentially getting involved in, let's say, equity futures, et cetera, on their behalf?
Well, so our CFTC licenses allow us to offer commodity derivatives. So futures, swaps, options and futures on anything that's a commodity or a commodity derivative. So I think that's what the LedgerX acquisition is focused on. I know the FTX US team, they have broad ambitions to get into all kinds of interesting, products, but certainly for the LedgerX piece, it's all in the CFTC world.
Are you coordinating that with FTX US now, or is that something you guys are you going to be working actively and potentially, let's say, trying to get the license for futures in equities and other derivatives?
I think that's a question for them, really. I think, just broadly speaking, though, the FTX US team has ambitions to become a really, really large player in all parts of the financial markets. So I think that that has some pretty straightforward implications.
So Zach,
just another question on options trading. Are you seeing more interest in ETH relative to Bitcoin?
Well, we've always been a Bitcoin platform. I think since we launched ETH options, we were really the first place to launch retail ETH options in the US, and there's been an uptick for sure. I think it's still mostly Bitcoin focused because that market is super liquid. It's been there for a while. You got a lot of holders who have been sitting on a stash and just want to sell calls. So the ETH options market in the US is still developing for sure, and there are features that we need to add, like down the road, like margin trading and other stuff you would see on some of the more traditional exchanges, just to enable more capital efficiency so that can grow further.
So yeah, Zach, I was going to ask, we saw FTX buy the Blockfolio product and then roll that into the FTX brand. Is it going to be a similar situation with LedgerX? Will LedgerX operate as its own platform, or what are the plans for integrating these two platforms?
Yeah, I think the FTX US team has been pretty clear that for now it's going to be just operations as normal, just get up and running after the acquisition, and then down the road we'll look at, okay, how do we make sure that you can go to FTX.us and kind of plug and play the options and the futures and the other interesting stuff and do it all from one interface. So that's definitely in the long-term roadmap, but for now, business as usual for our customers.
On the back end with KYC, know your customer, AML, anti-money laundering regulations and checks on your side, is that going to be consolidated with FTX US, or are those going to be two separate methods by which people can open accounts?
Yeah, so separate for now, and I'm sure eventually we'll probably take a look and see if we can consolidate. I just note that for FTX US, the reason why I wanted to partner with them is really because they've been super strong on AML KYC from day one. They've always had a program, and that's not something that I think every player in the space can say. And the fact that they've always had an effective program is even more important when you're approaching a regulator like the CFTC. You've got to have that demonstrated history of compliance. So the fact that we're both using either biometric or kind of advanced AML KYC technology is a huge piece of this deal, in my view.
Do you think some of that will eventually spread over to FTX.com itself, or is it just definitely going to be separate for now?
I mean, it's hard to comment on like the particular platforms, but I'll just say, broadly speaking, I expect the industry as a whole is probably going to be a lot more regulation friendly down the road. I think that's really where the value is. That's where the long-term money is, the revenue, the profit. The business. So to the extent that, any player in this space can improve its AML KYC programs further, I think they're going to start to do that.
Zach, I know crypto time is a little bit like dog years, and you guys have been at it for a while now, had your ups and downs, some rocky roads, some tough patches. You seem to have come out roughly in one piece. I just wanted you to reflect on the journey a little bit as you are joining a pretty prominent brand in the space right now after again, those peaks and valleys of startup life.
Yeah, I mean, it's interesting. Starting a clearinghouse is not something people do, and there's a reason there hasn't really been a new one that's done much outside of clearing for its own exchange in the last 30 years or so. Really, since the demutualization of some of the bigger names out there today, Cboe, CME. But we did that, and that is naturally going to be a very long road. It's going to be arduous. It's going to be tough. And from 2020 forward, with launching into clearing for multiple exchanges, we really took off especially on the clearinghouse side. And so I think it was all worth the effort. And there's a reason that it's so hard to get up and running with a clearinghouse in particular. That is one of the most difficult regulatory challenges that I think exists under the U.S. Regulatory frameworks.
Zach, just a broader markets question. This summer there were a few weeks when, trading seemed really flat and everybody was talking about summer doldrums and a bear market. Is that over? Are we out of that, or are we out of the woods?
Well, I've always thought there was going to be a Solana summer, and that seems to have happened. So I'm happy with that. I think people are, at least on our platform, are back to selling volatility. So I think that gives you a sense of where they think it's going, right? I'm obviously not trading on there, but if I were, I'd probably be following the herd there. I'm not a trader, more of an operator. So I think, selling vol is still the most popular trade, and that says a lot about probably where people think we're headed.
Are they just selling volatility in Bitcoin, or are they also doing it in ETH?
It's in ETH as well. Yeah. That's the call put spread is skew is totally interesting. It's all calls.
Wow, and that's
thanks so much.
And so yeah, so you're not noticing any mispricings when it comes to or at least any market sense of mispricings when it comes to puts, but it's more in the call space.
Yeah, that's right. And at this point, if there are mispricings, people kind of swoop in and take those out pretty quickly.